Well, it's great to have everybody with us today for our ESG panel here at the Oil and Gas Conference. We got some great participants on the panel. We have Ross Campbell. We have David Preng, and Preng and Associates is one of our great conference sponsors, so we're happy to have him. Chris Hewen with the University of Denver, and Susan Buharzadeh is with us with Great Western Petroleum. So I'm just going to go around and I'm going to have you guys each introduce yourself. Tell us a little bit about your background and your position, and then we will jump into our conversation about ESG. So let's go ahead and start with Ross. Tell us a little bit about yourself, and we'll go around from there.
Great, thank you, Dan, and appreciate being part of this fantastic panel. My name is Ross Campbell. I'm the Director of Responsible Investing at Barrow, Hanley, Mewhinney, and Strauss in Dallas, Texas. We are a $45 billion value shop, long only, that's been around for about 40 years. I think our focus on ESG and ESG integration when I started was to formalize our ESG integration approach and formalize our engagement platform, where our firm has been a significant engager of companies over our 40-year history. Governance has been tantamount. So it really was increasing the consideration of environmental and social issues in our engagements with our own companies.
Great, thank you, Ross, and welcome. David Preng, give us a little bit about your background.
Thanks, Dan. I background grew up in northern Illinois, southern Wisconsin, hired on with Shell Oil, who brought me here many, many years ago. Went to the dark side and got into executive search. Have been with a couple of other firms, and then 40 years ago this October founded Preng and Associates, and we just do work in the energy industry. And ESG is becoming much more important in what we do and what our clients are wanting to see. I've had the opportunity to be on 6 public boards, been NomGov chair of 4, lead director of 1, and governance has been a very big part of my background, and actually helped found the National Association of Corporate Directors chapter here in Houston back in '02, and spent 5 years as president and 2 as chairman. But before I sign off, my congratulations to you all here at Intercom and Aaron and the whole team, and making the 25th one in a row happen this week. So congratulations to all.
Thank you, David. And again, thank you for your sponsorship. And yeah, it's great. 25 years of the Intercom, the Oil and Gas Conference. We're happy to have be able to produce it even in this COVID world. Our next panelist is Chris Hewen with the University of Denver. Chris, tell us a little bit about yourself.
Hi, Dan. Thanks for having me join you. I'm an associate professor of finance at the University of Denver and co-director of the Marsico Investment Center at DU. I have a PhD in finance from the University of Missouri. I'm a CFA charter holder and have long been doing leading research in the investment analysis and equity valuation area. I also hold the fundamentals of sustainability accounting credential, so I'm very interested in a lot of the new metrics that are coming out. These are becoming so much more important, and it's really a passion of mine to talk about the way that equity investors are bringing these new metrics into play into valuation.
Great, thank you, Chris, and great to have you join us. And lastly, our panelist, Susan Buharzadeh with Great Western Petroleum. Susan, tell us a little bit about yourself.
Thanks so much, Dan, and thanks to Intercom for having us here. It's a really great opportunity for us. Great Western is the largest private operator here in Colorado. We are Colorado born, Colorado built. We operate exclusively here in this state. So we really embrace ESG, and I'm so excited to be talking about this topic that I'm very, very passionate about. Been in the oil and gas industry about half of my career. Started working for a trade, doing a lot of work with policymakers on federal lands issues back in DC, and I've had the opportunity through other experiences to work in basins from the Utica all the way out to New Mexico and everything in between. So it's been a great ride. And really, really passionate about ESG because I think it was one of the things that really drew me to this industry before ESG was even really an acronym. And I think it's that nexus of opportunity and responsibility and science that I think is just really compelling. And really honored to be with this distinguished panel and look forward to our conversation. So thanks again.
Well, thank you, Susan, for joining us. And I'll kick it off. And David, I'll go straight to you with my first question. And that is, we hear a lot of talk around the E aspect when it comes to oil and gas of the ESG. At Entercom, we talk a lot about ESG being a top-down culture at a company. So the G being a very important aspect of it. What are investors expecting to see on the governance side among E&P and oil field service companies?
Well, I think you have to take a look at what's happened in the industry. For the first 150 years, it was the growth investor who invested in oil and gas. They were excited about the fact that we were going, all over the world, exploring the spindle top, just the rush that came out of what we do in the energy industry got everyone there. They had one problem, though, which was dry holes. And because, especially as you went offshore, you went into the Arctic, these things got very expensive. And with the advent of shale, what happened, the energy industry was able to go back and say to people, hey, look, you don't have to worry about dry holes anymore. We're doing shale, and think of us as a manufacturer or a farmer. And with that, the growth investors started thinking more about the FANG stocks and didn't want to get investing more in this old stodgy farming industrial-like industry. So they moved out. And who came in, which was the value investor. And the value investor wants returns. And we weren't giving it to them. And that's, so today they're looking at, and if they're going to come into capital, and bring capital into the business, they want to see returns. If you look 10, 15 years ago, there was a mantra that we had HSE, and everyone wanted to follow that. And, that a lot of people, I hate to say it, blew it off and just somewhat ignored it. But ESG can't be ignored because the investor wants it. And if the energy wants capital from the investor, and especially the value investor, they're going to have to give the returns, and they're going to have to adhere to ESG principles.
Great. And Chris, I know that you've done a lot of work from the analytical side in terms of what good governance looks like. Give us your perspective on governance in the oil and gas industry and how that takes shape with respect to ESG.
Right. So out of E, S, and G, the G really is the one that is most quantifiable, and you can most easily relate it to peer companies. So I would argue that even though many people talk about the E, the environmental aspect of energy companies, the G from an investor perspective may actually be the one where you can create the most value. Because if you can identify a good corporate team, a good management team, they will handle the environmental issues. They will handle the safety issues for the employees. They will make good decisions on the social issues, which are probably the toughest out of those to actually measure and compare to your peers. So I think that investors should start with the G and make sure you've got the right management team in place, and that's what's going to drive responsibility across the corporation.
Okay. And thank you, Chris. Ross, from your perspective, and then Susan, I'll come back to you. Susan, I want to ask you about governance from a culture standpoint, but Ross, to Chris's point, what is the investor expectation in terms of governance and kind of the free cash flow and the return orientation? And kind of going off what David said, kind of the pivot from being a growth investor to a value investor. What are investors expecting from governance in oil and gas now?
I think that's speaking off of what David said, there definitely is a divergence to where we find ourselves here today. And to the extent that there was such a manifestation around the shale complex and the shale production stream, that majority of the comp structures on these oil and gas companies were directed and focused too heavily on just production outside of what we find to be true, especially in the value framework, which is cash flow, return on invested capital, and a few fundamentally the more of the focus that should be on pay for performance and not on TSR and stock price moves, because we've seen how that can actually become a self-fulfilling prophecy of people chasing just production results and bigger wells and not effective cash flow and cash conversion opportunities to return that to a shareholder value opportunity creator, right? So where we've actually been able to sort of refined ourselves and definitely focus our intention on a lot more of those cash flow metrics, it's our engagement platform. It's working with these companies over a long period of time that can stipulate how we identify. And I do agree with Chris that governance is tantamount. However, there are significant considerations in the environmental and social vein that can be measured and should be measured. So that's where we find ourselves.
Okay. I appreciate that. And we will definitely build on that. Susan, when we talk about governance within an oil and gas company, how can the leadership of a company begin to develop a culture within the organization of ESG and engage the employees in that culture?
Yeah, well, Dan, I'll agree with Chris, and I'll actually look at it from two different angles. I firmly believe that excellence in governance and leadership is what drives ESG principles throughout a company. And I think that lead by example and that visionary perspective from the corner office is the starting point. But I also think that leadership and governance has to be authentic to your people. And it has to give them a rallying cry and a source to say, it's a good job and it supports my family, almost isn't good enough anymore. And especially when you look at the multi-generational workforce, we need to give people a why. What is my why to choose this and invest my time and talent and my future in this job and in this industry? And I think that that's where that vision and perspective and investment in the future of whether it's the company or the future of the employee or the future of the communities in which we live and operate, it's really all encompassing. So I think that ESG really comes from both that grassroots bottom up, engagement, but it has to be believed in and embraced at that executive leadership level, because at the end of the day, that's what gains you that social license to operate, which really at the end, that's what ESG is so critically important to us these days.
Yeah, and I'll ask from your staff and frontline employees on up, how has that culture helped you guys? In Colorado, you talk about that social license to operate. How has that helped Great Western and the communities that you're operating in?
It's really been, as I mentioned earlier, kind of a rallying cry, and we developed a set of corporate values that we worked with our employees to define, to understand that we were really capturing the culture and capturing the goals of us as a company. We're 160 people strong. That's 160 Colorado families that rely on us. But what we did was we didn't just write out words and tell people this is who we are. We really sought to get that input. And those values are stewardship, teamwork, excellence, performance, growth. And we added a sixth one this year, which is resilience. And I think that's become really the rallying cry of 2020, which is what makes us resilient. And that whether it's dealing with external factors such as global price wars or the pandemic, to really close to home factors where you've got to be able to talk to your neighbor across the fence about what you do, whether you're a pumper or whether you're a landman, or whether you're a geologist, and helping people understand that connection that every single one of us have to this industry and how vital it is to our modern lives. Helping our people articulate their meaning really gives them connection to the culture and kind of completes that circle of buy-in. So it's communication, it's tools, it's education, and that personal sense of ownership.
Excellent. I want to shift gears a little bit. I'm sure the governance issue will come up a little bit more, but Ross, I kind of want to kick to you and say, from an investor perspective, when we talk about the E, or the environmental aspect of it, what are investors and what are you looking at in terms of materiality? What do you want to see oil and gas companies addressing on the E side of the ESG, in their communication for metrics and evaluating a company's progress?
Well, first and foremost, I think the most important thing is that I think there are three topics that need to be addressed in sort of this question. First and foremost, and divest or not. I truly don't think divestment is the best opportunity set for a broad value investor and or generally an investor who thinks that there potentially can be a great opportunity down the road, that the fossil fuel industry and oil and gas companies will be a continued need and a resource, and as we continue to move through our economic expansion and contraction for that matter. On the second point, I think the transition to the low carbon economy is something that I think that the divestment strategy is missing. There has to be a way for companies to understand that they have to be part of this transition. Investors need to understand that there will be a transition period to move towards lower carbon economy. And in doing so, that should actually help incentivize why investors need to analyze what a better risk reward opportunity can be. And then lastly, I think this speaks to Susan's point, is companies, specifically the ones that are in the audience today, are probably smaller and mid-cap companies. There's been a wave of change, of making an effort, and there's been a wave of IOCs that have come forward which make long-term plans and changes to their business model. In doing so, I think it would behoove them to take a considerate view of what might be material for them. Not to say that you need to come out and make leap and bound changes to your business model and potentially disenfranchise a number of your workforce. However, if you do consider some of the environmental and social issues as part of your long-term business sustainability plan, therein lies a real great opportunity for investors to gravitate, and ESG investors and client investors to gravitate to you and how you can be potentially your own center of change.
Great. I mean, and I think we all do see that. We see the larger international oil companies, kind of transitioning to wind and doing investments in wind and solar and some of those alternatives. I'll ask Chris and Susan to weigh in on this. Is natural gas, when we think about transitioning to a lower carbon economy, isn't natural gas part of that transition to a lower carbon economy? Susan, I'll start with you.
Yeah, absolutely. And I actually want to kind of kick off with one point, and that's back to what Ross was talking about from that investor view about renewables. And I feel like the first step is for us to kind of break down the walls of this false choice that we've got a fossil fuel or a renewable future. And I think that it's the responsibility of our industry and the people that work in it to unapologetically embrace our role in the energy mix and say that we are here and we are going to be a part of that future, and take the conversation from but to and. And, yes, I work in fossil fuels, but we have solar panels on production facilities. To, yes, I work in fossil fuels, and yes, we use solar in our production facilities. So I think that's important. To your question more specifically, Dan, about natural gas, absolutely it is. I think natural gas has been an incredible boon for North America. And I think the massive supply we have is an opportunity not only for our country, but for our world. and you look at other economies around our globe that really suffer because of their reliance on other sources of natural gas when we have such an abundance, I think that not only is natural gas a part of the E, it becomes a big part of the S. And I think that social justice piece from a global economy and availability standpoint is really important. And I'll come back to that a couple times today, but I'm a big fan of natural gas because of I think it's an incredible opportunity for our country and for our world and our environment, obviously.
Yeah, Chris, your perspective on natural gas's role in transitioning to a lower carbon economy.
Yeah, so this is such a controversial issue, but among rational, well-educated people, there's no doubt that natural gas plays a very important role as a transition fuel to a more renewable energy source. We need it. We have to have it. And even outside of just the ESG framework, if you look at the macroeconomic level and what oil and gas has done to help us alleviate the trade deficit, where we used to, years ago, we were spending so many dollars just importing fuel, and now we've got this wonderful resource here in the United States, which is helping us have a more sustainable macro economy. It really is a great thing. There have been a number of stories, of course, in the news lately, one associated with the Dakota Access Pipeline and the attempts to shut it down for violations of the National Environmental Policy Act, which is a first thing for crude oil pipeline. A lot of the resistance towards some of these transitional fuels is looking for the weak points where they can actually litigate and try and stop some of these things. And I think that you just get a bad impression sometimes from the news that this is sort of a dying industry, and it's really not. Another news item has been Dominion Energy's sale of its natural gas assets to Warren Buffett's Berkshire Hathaway for $4 billion. I mean, it was a huge story, but I think under the scenes, Dominion Energy really wanted money. They needed some funding. And I don't necessarily take it as saying natural gas is dead among big investors. I think there were other reasons involved in that. So unfortunately, the sentiment has really turned against natural gas, but I don't think in a rational way.
Yeah, I'll bring David and Ross into the conversation. David, from a leadership perspective, as you go out there, how does leadership that you're trying to bring into a company, how do you see them embracing the transition to a lower carbon footprint, knowing that they're going into a leadership role in a oil and gas company?
Well, there's leadership. Let's look at two ways. One, the CEO and the leadership team on down, I think looks at, they've got a job to do, is to run a business and goals to achieve. The other one you have to look at is the board of directors. And you can look at the board of directors, and I'll pick on you all in Denver. Take the Denver Broncos. Now, truth be known, I went to high school with Pat Bowlen. So now you know how old I am. But, you have, your head coach. He's your CEO. He sets, what are we going to do as far as a strategy on offense, a strategy on defense. He picks his leadership team, the coaches, and the players to execute. But who pays them? It's the John Elway and his team. It's this black box of people. They go out and the coach says, I want a passing offense. So Elway goes out, gets a quarterback, he gets receivers, gets a good left tackle. He's the one that judges and oversees what's being done. And it's this management that does it on a day basis, but it starts at the top. It starts with those people in the front office that are saying, hey, this is what we're going to do. If Elway doesn't like the coach or doesn't like the strategy and the way it's going, he'll replace the coach, just as a good board ought to come in and replace the CEO. I mean, what is their responsibility? Their responsibility is to look at, opine on the strategy, to hire, fire, and the CEO and pay, assess risk. They have certain things they need to do to make sure, and the oversight to make sure things are being run properly on the field so that the team can win the Super Bowl. And if you look at a board that way, there's that relationship that has to be, closer, and you have to really look at the composition on the board, which I'll leave for another question. But it's really an interesting dichotomy and working relationship that goes on between management and the board.
And Ross, from your perspective, we see natural gas and we hear activist investors who want to see a greener economy, but they're opposed to natural gas as well. What are your thoughts on that, and how do you reconcile that between investor and natural gas being a very clean fuel?
I think what you need to do is actually it breaks down into the audience that you're speaking to. When we speak to our clients and we effectively tell them what our 3 to 5 year time horizon is and exactly what we believe is going to happen around the energy complex and how there will be a transition, we realize that natural gas has its place and is a meaningful component of baseload generation. So outside of having a very quick and abrupt conversation with someone who potentially doesn't even want to hear that there's a place for fossil fuels, understanding that we have to collectively cross this bridge together to get to this part where we actually see the benefits of tapping into, Susan's point, this massive resource that we've been given in this country. And also realize that by doing that, we're effectively creating jobs, and jobs in regional areas in which you wouldn't have jobs, and tapping into a diverse workforce that generally is a lot more aligned with the retail side of things than it is to corporate. So where you can create jobs, understand that there can be a social component to this, understand that we will be a collective group that needs to walk forward in this plan to change, exchange, and improve our infrastructure, of which our country is dependent. This is how you actually can understand what a very effective communication channel can bring between an investor and a company, and an investor and their clients, who of course we've been given the opportunity to manage their assets. So we need to make sure that we understand where they're coming from, but also share what our vision or what our potential opportunity could be from a risk reward basis from an investment.
Thank you for that. And I want to kind of throw this out to everybody, just kind of poll your opinions on technology when we talk about a transition to a greener economy. What do you think the solutions are now and in the near future for the adoption of things like carbon capture and sequestration? Anybody have a thought on that?
I'd like to hop in, Dan, if you don't mind, and then maybe some of the more technical perspectives. But I think the world's our oyster. I think there's so much innovation in technology, and from Great Western's perspective, we've seen a lot of success in really developing a broad network of innovation across our vendors. And so demanding more from our vendors and demanding more from ourselves. And I think there's this implication that policy and legislation guides what we're doing out in the field, and it couldn't be further from the truth. And I want to encourage people that you can't legislate innovation, but you need to allow the free market to demand it. And I think that us holding ourselves accountable and holding that responsibility to the environment and to a better future for future generations is what's going to drive all of those types of things out in the field, and it should be that way. I once had a really interesting conversation with then candidate Jeb Bush. Shows how long ago it was, but it was a couple of years ago. But we were talking about how social issues so often get caught up in major elections, and he said, I'm a firm believer that you can't legislate morality, And I feel the same thing about you can't legislate innovation. And so I just feel like by companies and employees and driving this culture of responsibility and forward looking is what's going to make us relevant in the long term, but also help us uncover and tap into what's gonna make us part of that clean energy future. It's gonna take all of us.
Yeah, open to anybody else. Thank you, Susan. Anybody else want to jump in on that? Technology and the transition to a lower carbon economy.
I'll chime in just real briefly. I think that what we've seen already in sort of the carbon finance vein and the explosiveness of what green bonds have already been able to do, as well as offer from a lower cost of capital perspective, I agree with Susan. There's a lot of innovation opportunities. There will continue to be some. The amount of money that is trying to chase and further this innovation concept is extremely important. And then I'd also say that I've seen from a company level, the manifestation of internal innovation, which I think is fantastic. So a large E&P company in which we've been working with or been an investor in has been trying to create not only a zero emission frac pad, but also 98, 99% water recycling and usage of the emissions that actually come out, or the flaring opportunity is that it's actually now being combusted into energy that's offsetting their usage of the demand on the grid. So needless to say, throughout all of this, I can't attest to what is going to be the solving technology or the opportunity. I just do know that the resources will be behind it, and that I love seeing it, that it's even coming from smaller energy companies trying to do their own work and trying to do their own margin opportunity uplift.
Dan, if I could
David.
jump in, I like what Susan said in one of her first comments. It's not but it's and. We're drilling here and we're using the solar panels. And the other thing that she alluded to is right. This industry isn't going away. If you go back and look at where we were pre-COVID, the world was using about 100 million barrels of oil a day. Of that, about 30 to 32 million was for propulsion. And even if by 2050, all the cars in the world were electric or some kind of a hydrogen base, and trucks the same way, I don't know that I would ever get into an airplane that was solar powered, but that's something that's a person's choice. But I think if you look at it, what it says is that here we have 75 or 70 million barrels day to day of oil being produced that's going into other products, plastics and other things. If you look around your office, that's being made. And if you say, okay, by 2050, all propulsion is basically taken up by environmental sources, that's great. It cuts down on emissions, and I think that's fine. But the world today will grow from our 7.2 or whatever billion people up to somewhere around 9 or 10 billion. And you take a look at the economies of China and India, people that want to get into the middle class, that look at what we've been able to do in this country, want what we have. There's no reason they shouldn't have. And that's still going to be a reason and a need, a demand for oil. So, I think the energy industry has to embrace the environmental and be part of it and work together with it, because we need them to do things so we can do what our part, or what the other things that the world needs, some of which is being fulfilled today by oil that can be done by environmental sources.
Sure, great point, David. You displace transportation, but you still have all the other commodities, all the other products. I'm looking around my office right now at all the things that are made with hydrocarbon. Chris, your thoughts on that? Is oil and gas going away anytime soon? What does that mean for investor performance? and ESG.
Yeah, so I'd like to talk from the investor perspective for a minute, because I think that it's so important for people in the energy industry to realize that we are at a fundamental inflection point, that we've never seen anything like this and in our lifetime, my lifetime anyway, and exactly why that is from the investor standpoint. If you go back 10 years ago and look at what portion energy was of the stock market, it was a substantial portion of the market capitalization of the stock market. In recent years, 10%, 15%, I can remember. Look at the situation today. Energy has underperformed the S&P 500 broad market index 7 of the last 8 years. Energy's basically 2.5% of the S&P 500, 1.5% of the mid cap index. Investors can truly divest these days. And I'm not saying they should. What I'm saying is that energy is such a small part of the portfolio, they can do it. So energy companies really have to make the case that they are providing on these ESG metrics, and the burden is on them much more so than it used to be, because basically investors can underweight energy. And don't kill the messenger. I'm just telling you from the investor standpoint, they can do it without suffering severe tracking risk. From my standpoint, every company really needs to go out and follow a process. They need to identify their peers. They need to identify the key material metrics in their industry, and they need to demonstrate how they are basically doing better than their peers. Even though I've used ESG a lot in talking with you today, I hate the term. I think that really what we're talking about is more better framed as opportunity to enhance your multiple. And when you can show that you're doing better than your peers on some of these aspects, you give investors a reason to invest in you and not just underweight energy. And that's just the hard truth, is that the burden is more so on the companies these days than it has been in the past.
Thanks, Chris. Ross, I saw you smiling as Chris was talking. And I'll throw this fastball to you. Doesn't free cash flow solve a lot of the valuation and a lot of the portfolio weighting issues in oil and gas, as we see energy companies, deal with their debt, begin to generate free cash flow rather than throwing that all back into growth? Don't you think that is a fundamental driver of valuations and ultimately kind of rebalance oil and gas in the indexes?
I think so. And I think I have to agree with Chris a little bit more on this, is that by just changing and or refocusing your intention of your strategy on capital allocation towards debt repayment, that in of itself does not change the strategy and the mission for the company. And so to the here and now, of course, that is the immediate concern for a lot of investors. And until that is assuaged, then yes, you will have a continued focus on how much leverage this oil and gas company have, and exactly how are they going to be sustainable to survive this commodity downturn. I would say that changing your pay for performance and comp structure to be better aligned with longer term cash flow metrics, as we originally said, and return on invested capital, would significantly create a lot more support structure from the investor base and from the investor community to understand that we're not trying to do the same thing again. I forget what the adage was when I was at the oil company. I think it was, give me one more commodity boom and I'll change. It was one of those things where I effectively do believe that you have the opportunity right now to more find out about who's rowing in the right direction in your communities and who's not, and especially on the company side, where a potentially not founder-led company, smaller mid-cap companies, which generally they aren't anymore, can reinvigorize the base and the culture of the company to be moving in the right direction by changing the incentive structure, showing how the strategy will be different going forward, and allowing people and stakeholders and employees to contribute back into that. So that's how I answer that question.
Thanks, Ross. David, that kind of goes back to you. We didn't cover compensation when we were talking a little bit about governance, but Ross and Chris have both brought that up. How does compensation come into play for leadership of a company and to align it both from what kind of the fundamentals of finance, of free cash flow, and dealing with your debt, and also this ESG momentum and culture that we want to develop? How do you deal with compensation to align all those different factors?
Well, compensation drives behavior, first and foremost. Before I get into it, I just want to agree with Chris that you've got to look at the industry's got to look at and determine who their peers are. But I would let's say advise or caution a board or a management team. My peers don't also have to have the word oil and gas in their company name. I'm competing for capital with the value investor. I'm competing against people like Caterpillar Tractor Utilities who are giving returns, and I've got to have that free cash flow capability earn above my cost of capital so I can deliver back, and the people will come back to the oil industry, and we get away from this 2.5%, 3% and get back up in the high single or low double digits area. Now, on compensation, you have to look at I don't think there's any board unless they're replacing them has said my CEO is below average. And so what happens? Everyone looks together, and there's almost a compounded 12.5% bump. That historically we've run into that year over year. And what has to happen is, I think you have to tie compensation, especially the long-term, to long-term value growth, but not just growth, but it's value growth to, kind of what Chris was saying and what Ross is saying. And, what are the metrics of performance? And performance, obviously free cash flow and financial is very important, but you have to look at strategic, you have to look at operational, you have to look at individual performance. And all of this comes back to when you wrap it all together, it's ESG. So that is should be a very big component. And when you're looking at rewarding someone and he says, yeah, I'm judged on my long-term performance. How much is it? Well, 15%. And so the company has gone from a $30 stock to a 30-cent stock, yet they're still making the same amount of money. That's not right. You got to have the board should take that. The comp chairman, can't be the friend of the CEO. You can respect him, but he can't be the friend because the board has to do what's right with compensation and put in the drivers to affect the behavior that drive for not shareholders, but stakeholders, the shareholders, the employees, the customers, and the community in which they live. That's what has to be driven by compensation. And ESG is a big part of it.
Yeah, thanks, David. And I'll go back to Chris and Ross and just have you guys kind of give me your thoughts on, how is that changing that compensation tie to not only financial performance, but also ESG performance? How is that is that getting a lot of traction in oil and gas right now? And is it moving quickly or is it moving too slowly?
I'll jump in real quick, Chris, if all right. I think the metrics at which we govern and show improvement and understand how companies can align, and to David's point, compare ourselves to others, are yet still to be brought forth in a meaningful way collectively. So it's very difficult to use a yardstick and not be able to show how it looks against competitors and or yourself on a comparable year-over-year basis. The usage of SASB, which is the Sustainability Accounting Standards Board, is something that we find to be the most helpful metric and framework to use because they do show what metrics should be disclosed by companies to justify and to show how they're improving year on year and against competitors. Where compensation is concerned, historically, oil and gas has had such a significant opportunity and usage of HSE in their comp. So it's not very difficult for me to understand how you couldn't give additionality to the HSC vein and incorporate some more ESG factors within that universally will align everyone on a comp plan.
Chris, I'll let you weigh in whether you see this tie of compensation with ESG growing and moving forward quickly or slowly.
It truly is in its infancy. And I don't think that the metrics that we have are as well established right now to easily do it, but it's something we will see in the future for sure. And I would echo Ross's comments about SASB. SASB is a great organization that takes a unique perspective, and that's the perspective of the investor. They look at the issues that are material for each industry from an investor perspective. They publish the metrics. It's so easy for a company to go out and say, what specifically do I need to release in terms of the E and the S and the G? And SASB's even broken apart the G to have a section on business innovation and their business model. So I think that they've even taken sort of the next step forward in expanding on the G in a new area. So I'm a big fan of the SASB metrics. They're investor focused and done with industry partners. So I think that they're at the forefront of what's going on with developing these metrics.
Great, Chris, and we'll probably get a chance, hopefully have enough time to come back to benchmarking. I want to kind of shift gears to the social aspect, and Susan, I kind of want to throw it to you. Just sitting here on a panel with gentlemen, you are a female. We look at our industry and we know that it's male heavy. And we can talk about diversity. That is a big topic today. From your perspective, and from Great Western, how do you expand the diversity within oil and gas on the social side, and how do you cast that bigger net? How do you get young ladies and to be interested in oil and gas and engineering? And what are you guys doing to do that, as well as minority recruitment into the company?
Absolutely. I think inclusion and diversity are principles that are reflected in all parts of a solid ESG strategy. And I think inclusion and diversity is a conversation that we've probably been having, but didn't really call it that, and certainly didn't talk about it. I think the oil and gas industry's greatest folly over the last 30 years is not getting out there and really telling the story of all of the great work they're doing, whether it's with regards to innovation, as we were talking about earlier, or whether it's with regards to fostering opportunities for minorities and women in this industry. As I mentioned earlier, I've spent the last 11 years in oil and gas, and I've never felt more welcome, and I've never felt like I had more respect and opportunity, regardless of whether I'm a woman, but just because I think it's a really solid industry built with scientists, and looking for that next evolution of who we are as an industry. And I think, to Chris's allusion, I think ESG is it. I think we're just at the tip of that iceberg. And when you look at a company like Great Western, 40% of our employees are female, and actually almost 37% of those in management positions are female. And I think for us, it's a strategy of fostering those networks. So being engaged in the appropriate networks, whether they're professional or in the community, that puts a face to this industry that people really have a mass generality about, giving women an opportunity to network with each other and learn about this. And then also, it's really strategic investments and connections with those communities. So we are really focused on supporting STEM opportunities in the schools here in Colorado, whether it's in high schools. We've done workshops at even middle schools, and we took one of our senior geologists, who's a female. She's a PhD in geology, and she just about wowed the socks off of every 9-year-old boy in this classroom by saying she got to play with lasers and go visit volcanoes as she studied geology. So it's that touch of inspiration and showing that people who look like me or look like you can do it too. And I also think it is building that web and that network of your community partners. So I also sit on the board of the Boys and Girls Club of Weld County. And so connecting those partnerships we have with STEM schools and charter academies and even institutions of higher education, whether it's a community college or a traditional four-year college, connecting those folks with the Boys and Girls Club and saying, hey, the three of us, let's put together a career fair and let's show the opportunity for kids of all walks of life to explore a career in oil and gas. And I don't want to go on too long, but I've got 2 more points. But one of them is there's incredible workforce diversity in oil and gas. And that's one of the things I'm so proud about is, you look at the generation, the whole population of people in oil and gas, and only about 50% of them in an average EMP have post high school educations. So that means there's an incredible amount of skilled labor and certificates out there ready to have, shovel ready jobs for people to raise their families. And I think that's really exciting. And I also just think that getting out and inspiring those folks and telling them about this opportunity is it's our responsibility as well. So obviously I'm really passionate about that piece and could go on for quite some time, but I think it's building those connections and being very strategic about your engagement in the community and being of service. We are greater than the sum of our parts for sure.
Yeah, I'll ask the rest of the panel. Do you think the oil and gas industry, from leadership on down, do you think we're getting out in the communities enough and really speaking to people about the opportunities to jobs? And are we speaking to a broad audience, whether it's skilled, whether it's female participation in STEM, whether it's minorities that may have never considered oil and gas and heard about it? Are we doing enough to kind of get out in the schools, the elementary schools, the high schools, the vocational schools, to talk about these types of opportunities? David, I'll start with you.
All right. Well, we have some clients that are, I would say, a couple of them that are the larger independents, and one of them has a set policy that they want their workforce to mirror the community that they live in as far as diversity. And that's not just gender, that's, diversity across. And they're trying to do things to get out, to go to schools, to talk to, not just the seniors in high school, but to start earlier on. As Susan said, here, you talk to a 9-year-old and you show them some things and they're awestruck. That's what has to happen to get out and start people early. I mean, and again, most of my searches are at the senior and at the board level, but in the last 10 years, we just did a look back. 48.1% of our board placements have been diverse. So we're pretty proud of that. In fact, of the last 12 that we've had, there's only one that didn't have diversity as a definite element in there, and that was accidental because you had 3 board members that were female. The CEO was female, the general counsel was female, and as they said, ISS had ticked the box on that. To them, diversity was more skill sets than it was gender or ethnicity. But it's and again, you have to look, what does that company need? And there's no one spandex fits all, but I think a company does have to reflect the community that it's lived in, and to bring the diversity, the different thoughts and skill sets that the variety of people in are going to make it better, going to make it more innovative. And I think that's part of the beauty of our industry is, we'll find a way to do it.
Awesome. And thank you, David, for that perspective. Chris and Ross, I want to cover just ESG research and framework real quickly on which standards should oil and gas be looking to report to? And then Susan, I kind of want to wrap up with you in terms of communication and outreach to reporting agencies. So Chris and Ross, tell me a little bit about standards and benchmarks with respect to ESG. What do you like and what do you think are most important there?
I think Chris and I will have agreement on this one. As we've said before, our firm is a alliance member to SASB. I've effectively seen that they can be probably the most considerate and collaborative framework out there in context of being willing to share and work with other frameworks, whereas others have been a little bit more rigid. So with that in mind, I think that you need to still be flexible. You still need to be able to learn and improve your own framework, however you come out. So true, I don't think that everything has been perfected. However, I think that SASB has done a very thoughtful job of trying to approach it the right way.
Chris, your thoughts on that?
No, I agree with that. SASB's at the forefront of this. But I also have to throw out a word of caution that the metrics at this point are a glorified mess. They're simply a mess. That everyone's not behind it. A lot of the metrics out there are not quantitative. They're basically boxes that are checked, yes or no's. And we need to move beyond that. We need to have metrics that are specific to a particular industry. And I'm sure we all know energy is a fundamentally different animal than the rest of the investment space. One of the reasons why energy is different is just the use of property, plant, and equipment. I mean, it's very heavy on fixed assets, and we're increasingly moving to a knowledge-based economy with intangible assets. So people are using different valuation approaches in the energy space. So energy really does need to have its own set of metrics. So I caution every investor to compare within the industry, use similar peers, and just treat each sector and industry as the unique business that it is. But energy is definitely different.
Well, that's a great segue, Chris, to kind of our closing question. I'll throw this to Susan. What Chris is saying is that this is an evolving process, this ESG. So how does that fall on the shoulders of somebody like yourself to go out and communicate directly with the different ESG rating agencies and your stakeholders, your ESG message? That obviously makes it more important. And how are you going about doing that?
Yeah, thanks, Dan. So obviously, oil and gas is a data-driven industry, and we are, historically engineers and scientists, and we love numbers, and we love to pull that data together. But at the same time, I believe oil and gas is also a socioeconomic powerhouse with regards to the opportunity that we talked about earlier. Healthy populations. There is a direct, arguable correlation globally between access to energy and healthy populations. Diversity. Let's face it, a lot of oil and gas producing countries in the world, we're talking about women in leadership and diversity here. A lot of oil and gas countries in the world don't allow women to have those types of opportunities, don't allow women to seek educations or work outside of the home or vote. And so, to me, this is a really important issue that we say this is a global moral issue. It is an uplift from poverty. I think, there's so many arguments here, and I'm bringing all of that up because I think in the past we've been very data driven, which is great because that's our history and that's what we're good at. And that's really, really, really important, particularly when you're looking at indexes and the investor community. But I think we also, when we come to communicating the viability and sustainability of our industry, we have to step back just one little bit and give ourselves the permission to be philosophical and have those broader conversations about the implication of a world without fossil fuels, and help people understand that only a society with a gift this great could possibly think of turning off the valve. right? And I think that's what it takes. It's just turning the perspective a little bit and challenging people to think outside of their perceptions and their norms and what they've been told. I tell people all the time about the opportunity in oil and gas. I studied English literature and philosophy at the University of Colorado at Boulder. I have no business having a job in the oil and gas industry, but here I am, and I hope to do it for the rest of my life because it is so inspiring. And it's because of that philosophical connection. And what I referenced, when we started this panel, it was that ESG that wasn't even defined when I learned about oil and gas that made me so committed to it and want to dedicate my career to it. So I think that's it. And I think that's what's going to appeal to millennials. Millennials don't just want a good job and a career. Millennials want a job that does something and gives back and is toothy and something they can be proud of. And I think it's those types of conversations, communications, and validations, quantifying that's gonna break the mold and show us as that sustainable partner in our energy future.
Well, listen, that's a great way to wrap up. Thank you, Susan. I got to say thank you to each one of you, David, Chris, Ross, and Susan, for participating in this panel. I hope that it's been helpful to all our viewers. And we all know that ESG is going to be continuing to grow and evolve. So thank you for joining us. Thank you for helping out our attendees understand a little bit better ESG.